Hello everyone, and welcome to Next Vault. Today, we're answering a long-term investor favorite: how can you one day live off dividends? Dividends are a popular way to generate passive income, but how do you build a portfolio capable of truly sustaining your lifestyle? That's what we'll cover in today's video. Let's dive in. What are dividends? Let's start with the basics. What exactly is a dividend? A dividend is a portion of a company's profits that is distributed to its shareholders. It's how companies reward investors for backing them, paying out a share of the profits as regular income. Dividends are typically issued quarterly or annually, but many investors see these payments as a powerful way to generate passive income over time. The advantages of dividend investing. 1. Regular passive income. One of the main benefits of dividends is they provide steady income without requiring you to sell your stocks. This can be especially appealing for anyone looking to create an additional cash flow without having to actively work for every euro. 2. Snowball effect. Reinvestment. By reinvesting the dividends you receive, you gradually increase your stock holdings, generating even more dividends in the future. This creates a powerful compounding effect, where every dividend payment helps grow your passive income further. 3. Stability and predictability. Some companies have a long history of paying stable or increasing dividends. These businesses offer greater predictability and security for investors, as they tend to be financially strong and more resilient during economic turbulence. 4. Inflation protection. Dividends can be a useful tool to guard against inflation, as companies often raise their payouts to match rising prices. The challenges of living off dividends. 1. Capital requirements. One of the biggest hurdles to living off dividends is the initial capital required. To generate enough income to cover your daily expenses, you need a significant amount of money invested in dividend-paying stocks. Example, if you want €2,000 per month in dividends and your portfolio averages a 4% annual yield, you'd need around €600,000 invested to reach the goal. 2. Choosing the right stocks. Not all companies pay regular or growing dividends. Selecting financially solid businesses with a reliable dividend policy is essential. Additionally, while some companies offer high yields, overly generous payouts can signal a high-risk investment. 3. Risk of dividend cuts. Dividends are not guaranteed. In tough times, some companies may reduce or even eliminate their payouts to conserve cash. This can pose a problem for investors who rely on dividends for income. 4. Taxes on dividends. Dividends are often subject to taxation, which reduces your net yield. Tax rates vary by country and financial strategy, so it's important to factor this into your calculations. How to build a dividend portfolio. 1. Choose stocks with solid, growing dividends. Focus on companies with a track record of stable or increasing payouts. Sectors like consumer staples, utilities, or healthcare are often good choices due to their stability. 2. Diversify. A dividend portfolio shouldn't rely on a single company or sector. Diversification reduces overall portfolio risk and ensures regular income even if one sector struggles. 3. Reinvest dividends early on. It's important to reinvest your dividends to grow your capital and boost future passive income. As your portfolio grows, you can start withdrawing some dividends for personal use. 4. Balance yield and stability. Investing exclusively in high-yield stocks can be risky, as it may indicate that a company is paying out too much of its earnings. Aim for a balance between solid yields and financially stable companies. Living off dividends in 2025, is it realistic? Living off dividends in 2025 is entirely achievable, but it requires a methodical approach, long-term planning, and significant starting capital. The keys are to start early, diversify your investments, and reinvest dividends to accelerate portfolio growth. Reliable companies in stable sectors remain great choices for generating passive income. Remember, building a portfolio that provides sufficient income takes time and discipline, but the rewards are well worth it. Conclusion: dividend investing is an excellent way to generate passive income and build long-term wealth. However, it's crucial to understand the risks, choose the right stocks, and maintain a long-term perspective. Thank you for tuning in to Next Vault. Don't forget to subscribe for more tips, analyses, and insights on investing, finance, and wealth management. See you soon on Next Vault.